Jensen's playing daddy, and like their kids are getting a little spoiled with the quality of life they've all lived because of all dad's hard work and money.
Welcome to Investing with the Boys, episode 23. We have the CEO of Futurum Group on here, Daniel Newman, as well as, of course, Chief Strategist of Futurum Equities, Shai Balor, and myself, Sam. No title, but still very present. We're going to
host of Investing with the Boys, man. Give yourself some credit.
Okay, I'm one of the boys. Sako, unfortunately, was not able to join with us today. Great to have you on here, Dan. This is a long-awaited outcome, and again, I think the audience appreciates it. I appreciate it. Shai appreciates it that you guys were able to help bring back and revive season 2 for us, which is really good. Just to kind of preface a little bit, I know a lot of you guys. There's a lot of news that came out this week. We had the UK basically signed massive deals with Microsoft, NVIDIA, CoreWeave, and so on. We had FOMC. We're recording here on Thursday. We have FOMC yesterday. We got a 25 basis point cut, which was pretty much expected the whole time. And then just this morning, we heard that NVIDIA is going to be investing $5 billion into Intel. And for the first time in over a year, Intel is back above $30, which is really good to see. So, yeah, let's just kick it off to you, Daniel. What are your thoughts on pretty much all of the quiet week that's been happening so far?
Yeah, every week is a big week. You used to sort of think during different parts of like the earnings cycle that there'd be like, oh, this is the little down window. Nobody's reporting this week, or there's only a couple of tickers reporting. But now with AI, with the Trump administration, with China and tariffs, inflation data, every week is a big week for the market. There is no time off. And you can see that on your two's Twitter handles. You guys are, some of the best out there at sort of splashing everybody with what's happening day in and day out. You can't miss Stock Savvy Shai. Best eyebrows in the business. But look, it's this was a big moment because we can sort of downplay the FOMC decision, which, by the way, I think was pretty political. I think it probably should have been 50 bips if they were being serious, especially with but again, there was this concern about whether or not they're going to create more panic. But the job market's rough. But the markets otherwise are great. You got assets at all-time high. And by the way, super interesting because you got your risk assets and your safety assets both at all-time high. So this is a really weird time overall for the market. And, if you're an investor, you're sort of thinking like, how am I supposed to be playing this? I took some defensive positions this week. I actually took a big stake in Pfizer that's trading about $1 over book value right now, and paying a 7% dividend because I'm sitting there, I've got so much guys tied up in growth and I've had an amazing year. I'm up like 90%. My portfolio is up like 90% year to date. But like the music, man, it's like I'm listening, I'm bobbing my head, I'm loving what I'm hearing. But I just feel like at some point, for no reason, the music's just going to stop. And there just has to be. We haven't had a 5%. We have not had a 5% correction since the April fall. Not a single time. We've gotten to about 3.75% on the S&P. Not a single 5% correction on this ride up. Unbelievable. But we're all getting wealthier. Look at like IONQ. Look at Micron. Look at these names. So I'm super happy. Look, everybody's getting wealthy if you're playing in the market. But I definitely feel like there's some risk out there right now.
Yeah, go ahead.
Just going off of what Daniel's saying, it's crazy because every 3 months we're realizing the pie is much bigger than anticipated. And I think that's what's kind of causing this up to the right constant movement and why there's a lack of any kind of correction. It's a V shape. Like when we have any kind of pullback, it's 3% in the matter of like 2 days, 3 days, and all of a sudden retesting prior highs. It's because AI is the main event. It's going to continue being the main ticket event. And the first stage of it is a lot more prolonged than I anticipated. And I think that's going to continue high tide result boats when just this Intel deal, I can talk about briefly. Like that's massive for Intel. Like this is a $120 billion company. So many other names have just like caught bids in the past couple of years while Intel's just been declining that if they're substantially like ARM, for example, is a bigger company than Intel. You would be surprised to hear about that, but it is. And I think that there's a lot of implications on this NVIDIA and Intel deal, but another reminder that NVIDIA holds the keys to this new digital economy. It's everyone needs to be working and acting on its own terms. If they get a sniff of a company being less Switzerland or a company trying to eat some of their lunch, they have the ability to flip a switch overnight to dictate what the new economy will be like on their own terms. This was a classic example on how they can do that, because now they're essentially redoing what the CPU space is going to look like now in the new digital economy, where Daniel could probably speak on this a lot more than I, but CPUs used to essentially be the chip you needed to get GPUs online. But now with NVIDIA co-developing their NVLink capable x86 CPUs stop becoming the toll, and now they're starting to become that part of the actual AI engine. And if you get the world's most entrenched software ecosystem, which is the Windows and x86, and suddenly put those chips directly into NVIDIA's GPU stack, you're back and part of the AI roadmap in a very real way. And now it's also a beneficiary to NVIDIA to help out Intel's foundry long term, because they don't want to be solely reliant on one AI factory. And they are right now. TSM is the chef's kiss right now on AI factories. Nobody can replace them. And NVIDIA, with this announcement, is not going to give up TSMC overnight, but it absolutely wants a second source long term. Not just them, the US government. Everyone wants more AI factories that's not just dictate on one company. So especially when geopolitically and capacity tightens, like you want more. Intel Foundry, now I do believe they still have to have the proof of execution, but there is enough investment from the US government as well as NVIDIA that they could be that safety valve if they execute. And I think that's why they're catching a bid, because when we're talking about a second foundry, we're talking about a company that should be valued much higher than what Intel's current market cap is. And I think it's a win. It's a win-win-win. It's one of those rare. There's a couple of secondary effects there on the downside we could talk about later, but this is a massive win for Intel shareholders.
Yeah, I agree. It's definitely been a rough few years for Intel shareholders. But I think that it was kind of obvious it was going to happen at some point, especially when the U.S. government or Trump did get a stake in Intel as well. I don't know, maybe there's something political attached to that they're incentivized to put in the $5 billion stake. I think that $5 billion stake or not, I think that Intel surely deserves this pump regardless. I mean, like you're saying, this is the U.S. based foundry. Obviously, TSM is coming to the U.S. with the Arizona plant as well. But I also think major winners in what the market's showing us today is that you have Astera Labs up 5%. You have LRCX up 5%. You have ASML up 7%. That's a lot of machinery, and that's a lot of components and materials that need to be brought into the U.S. because of the upscale that Intel is going to be doing as far as bringing onshore manufacturing. Yeah, go ahead.
No, I was going to say, I think it also highlights how many people had an Intel problem. ASML had an Intel problem. Same as Synopsys. Like Synopsys' recent pullback was an Intel problem. Now all of a sudden, like if Intel gets Second Light and Renaissance, there's a lot of beneficiaries off that, because Intel's a massive company. Yes, they don't have a foundry, but they have a huge implications across other ends of the ecosystem. Daniel, you're going to say something about that?
Well, no, I mean, Intel is going to be the U.S. foundry, and it was decided when President Trump made that investment. Mm-hmm. The delays in some of their high NA spend have set back different parts of applied materials, has been impacted. ASML has been impacted. You mentioned Synopsys has been impacted. The overall situation, though, is pretty straightforward. Is we were going to get here, and now you have about 16% of the company owned by the U.S. government, NVIDIA, and SoftBank. Okay, you have a situation in which that means SoftBank, which owns ARM, it owns GraphCore, it owns Ampere, and of course, it's got the 80% of ARM is held by SoftBank. So it's like only 20% of ARM's shares are traded publicly. Part of the reason I think it trades the way it does. But like, you now are in a situation where they've been chosen to win. Now, you can argue whether that's capitalism or not, but the US, it's not just about building foundries. Samsung has foundries here. TSMC has always had foundries here. Not always, but in recent decades, leading edge, not their best, but they're never going to bring their best here. So they're always going to be an N-1 strategy, and they're always going to have their best IP over in Taiwan. China is too much of a geopolitical risk, and the US not being able to make its own leading edge chips is it's an unmanageable, and it's a existential risk to the United States of America, and by the way, to the West. Period. So full stop. Intel had to win. Now, a couple of interesting things about NVIDIA making this deal. One is it was clearly a shot across the bow to ARM. You're going to go build AI chips. We will partner, and we will basically slow down the development of the ARM ecosystem. That's what they're saying. It was a straight shot across the face to AMD. Basically, we will pick the x86 winner. So, because EPYC has been a great success. AMD's biggest success in data center has been EPYC. And now, basically, NVIDIA is saying you want to pair an x86 processor with a NVIDIA GPU, you should do it with an Intel. Don't do it with an AMD.
And you can scale it without risk now. Yeah.
Now the AMD's going rack scale, and they're wanting to compete head-to-head, top to bottom, full stack with NVIDIA. NVIDIA's saying, so NVIDIA basically is literally just giving the middle finger to everybody that is in their supply chain or that competes with them in some way, shape, or form. With TSMC, it's the same thing. We're going to package these systems, these SoCs, with Intel. Foundry's going to get the packaging of this stuff. Then the question is like, look, you think you control us, TSMC. You control the prices. You've had all the say. Well, guess what? We're going to start working with Intel here. You get too cocky, we'll start to bring capacity over, and we will. And by the way, all at the same time. Just put this there. All at the same time, they're making better friends with President Trump because they're giving President Trump what they want. NVIDIA is playing the perfect game right now and totally setting themselves up to continue to control this market.
So,
do you know what it's like, though?
Oh, go ahead.
No, because you know what it's like? It's like Jensen's playing daddy, and like their kids are getting a little spoiled with the quality of life they've all lived because of all dad's hard work and money. So now all of a sudden the egos and kids are becoming way too spoiled. So now Daddy Jensen's essentially saying, all right, well, I'm going to remind you what life is like if I act accordingly this way. Middle finger to ARM, middle finger to AMD, TSM. Essentially, like, you guys are getting your egos are getting bigger and bigger. You think you can do AI without us or work around without us? Good luck. All we have to do is one move on a laggard like Intel. Now we see a new competitive heading for you guys. I think but like you said, Daniel, it's such a win-win where getting in Trump's favor is like so important. And I think that being able to stick a middle finger to your biggest potential competitors down the line, by biggest competitors, I mean everyone fighting for that sub 20%. But either way, and getting in favor of Trump, it's a win-win-win. And there's, of course, the NVIDIA way, and it reminds everyone they're the kingpin.
Yeah, I mean, if you ask me, and like you're saying, Daddy Jensen, is it that NVIDIA is getting the favors from Trump, or is Trump getting the favors from NVIDIA? You ask me, I think Jensen Huang is really just in control of this entire story. And Trump is using Jensen Huang as a leverage point to bring more onshoring, create more jobs, increase GDP. And at the same time, you have the disinflationary effect of AI basically making things way more efficient and more productive, that you start to have that disinflationary effect, which in turn leads the way toward a more dovish Fed. I don't think that we have succumbed to that point yet where it's like, this is very apparent. I think it's getting there, right? But we are slowly bringing more jobs onshoring. And at the same time, we're taking away the Taiwan risk with China, right? Like, that's always been a big overhang. But if we're starting to onshore a lot more chip manufacturing, we start to decrease that dependency with Taiwan. And then maybe at some point, China has to fold their cards, not necessarily fold their cards, but start to give in, where it's like, well, now we no longer have this leverage against you, or we can just invade Taiwan at some point because maybe it doesn't matter as much as it used to. right? I think, like you say, I think at the end of the day, that the
I
time
would
of all
say
ships.
there's an interdependence. You know, the amount of power the Trump administration had to create some pain for all these companies that refused to onshore was legitimate, and it could have created pain. But the problem and the reason it's interdependent is the pain wouldn't have been limited to those companies. It would have been the pain of the economy, and that would have ridden on President Trump. You know, the fact is that winning the AI race is going to be winning the world's economy. Soon
Mhm.
it'll be winning the AI and quantum race, by the way. But right now, the AI race is winning the economy. And so the choice was to allow or have the risk of Chinese tech diffusion. And by the way, almost all the rumors about China are FUD. They're almost all nonsense.
Totally. Yeah.
Almost everything you hear is nonsense. And it's great that there's useful idiots all over the internet to support it. But the fact is like they're so far behind on tech, not on research. They have some very talented researchers, but they do not have the researchers want the NVIDIA technology. China is nationalistic in its interests. It will continue to invest to build its own chips. And by the way, for the same reason we want to have our own foundry, they should try to build their own chips. Our relationship with them is not in such a state that they would ever want to be dependent on us. When we're the world's second largest economy, you certainly shouldn't be, making the next 3 or 4 decades of your decisions based on whether or not only will NVIDIA sell, but the US president or the US administration will allow you to sell to them. So everybody's looking out after number one, and they're doing it the right way. But look, Intel got the mega boost it needed. If you were short today, I hope I'm guessing you're absolutely burning right now. And you probably deserved it because at some point it gets just greedy. The thing's been trading around book value for the last few years. The fact of the matter is, though, is that this was the shot in the arm that the company needed. Jensen's not only playing daddy, he's kingmaker. Whether it's CoreWeave, whether it's Nebius, whether it's any of these other energy stock plays, whether it's the software partners, whether it's Dell. He gets up, he says this is the place to buy your NVIDIA, buy your AI, and it literally moves the market. I mean, he's like Gordon Gekko, the one that wasn't in prison. He can move the market, and he knows how to do that.
That's one of the reasons why I like Nebius so much. I know you guys are bullish Nebius too, and I'm very happy because that gives me confirmation. Like, oh yes, if Futurum Equities is in on this, and if Shai's new wife is bullish on Nebius, which I don't know if she has a choice, she has to be, right? But NVIDIA owns part of Nebius. NVIDIA has a decent stake in Nebius. It's part of their portfolio, and on top of that, they're both clients of each other. Like it is in NVIDIA's favor for Nebius to succeed. And we've already seen the succession of Nebius. They were able to sign a $17.4 billion contract with Microsoft, which has room for a few $1 billion more. And all of a sudden, even though Nebius wasn't directly mentioned in any of the UK deals, like where is Nebius headquartered? Where are a lot of their relationships? I know most of their relationships, most of their compute is built in the US because that's what they serve the most, but they have a big presence in the EU. Can you imagine if maybe something happens with there? I don't know. Maybe it's speculative. Go ahead, Shai.
No, it's just the AI pie is so freaking big. Like it really is. And I think that there's last 2 years, I know Daniel has done a 5x amount of times I have, but the amount of people trying to call the top on AI has been nauseating. And every 3 months they get reminded soberly on how wrong they are and how wrong they're going to continue being. I'm not going to call this person out, but we had a very intellectual battle in front of a public space with this person who is really smart and bearish on AI. It was in a private dinner setting and it was from investors, but this person was claiming NVIDIA was never going to reach 150. Their gross margins were going to go trend towards 55, 60%, and that their pricing power in their hardware business will go away in months, not years. And I was trying to say, and it's proven right now, I honestly don't know if NVIDIA will ever actually have that bear moment for years. Maybe it might be even decades, to be honest. And the only time it might not is that digestion period from when supply meets the demand finally, eventually, before the next leg up happens, which is physical AI, which we do not have started yet. Massive, massive beneficiary for NVIDIA. Quantum, they're going to be a beneficiary of quantum as well. They're going to have some way of being involved in that. Like every secular growth theme, NVIDIA will become the kingpin of, because everyone needs their GPU engine. Not just that, they need CUDA, they need NVLink. Like you're seeing proof of like they are the oxygen of the new AI world's going to run on, and they're going to be massive because of that. And they're not going to go to 2 billion, 1 billion. So like I think that $2 trillion or $1 trillion anymore. I just think that's another proof of it's a lot riskier to call top on this AI party than it is to say that we're in the early innings. Like it's actually got a long runway. And yes, hyperscaler demand, the year-over-year delta might diminish, but I do believe like the China FUD is probably the only FUD on NVIDIA, but I'm on part of the camp. I know Dano is as well, where it's not going to be lost demand. It's going to get scooped up elsewhere because of the inference demand boom we're experiencing. So there's going to be more of a smuggled demand than there's going to be lost demand if there's anything that's going to happen on the China front. Like it's just, they're going to find loopholes to get it, because if you're a Chinese internet giant, you cannot afford to be that much behind on the AI race, because again, what Daniel just mentioned, the world economy is going to be dictated on AI. So doesn't matter how you get there, you're using NVIDIA chips or not, you can't afford to be lagging, especially as a second biggest economy.
You heard me. I shared something earlier about Lisa Su. She kind of said it's a decade-long demand, and we're only a couple years in. But the bottom line is it's nowhere near the peak. This goes back to the conversations I had at Milken, back to when I was at Davos. Like all these places, like you basically heard, insatiable compute demand. There is a bit of a digest and ingestion period for some of the use cases and workloads. That's not illegit. And that's also the same reason on the other side of it that I've been more optimistic that some of these SaaS companies, for instance, can survive, is because like when it comes to the consumer and the infrastructure build out, this is full steam ahead. When it comes to using AI inside enterprises, there's a lot of complexity to implementation and scale. And then a lot of it has to do with data. A lot of it has to do with how processes and workflows work inside of companies. A lot of it has to do with regulatory and compliance issues. But the bottom line is like, I think we're a few percent into the infrastructure build overall globally for the whole AI play. And we're probably not even 1% in when it comes to enterprise. We are literally mostly the enterprise AI that people are doing is a consumer use case. And then they somehow plug it back into work. Like, oh, I had ChatGPT help me write a press release, or, oh, I had it help me create, or, I used it to edit a paper, or like the point is like, it's being used off the shelf. It's not being integrated into workflows. It's not compliant yet. This stuff's just getting started.
No,
go on.
I was going to say, this is just directly related to what Daniel was saying. I would say that the streamlining of building basically APIs, right? So ChatGPT has or OpenAI has a API where you can hit their models, and a lot of other companies do as well. And I've actually built pipelines and integrations where it hits the API from a code perspective versus just using just the chat interface. And I don't think that's really talked about yet, because that is where the time is here. Because you're already automating a pipeline through integration of workflow, but then you're adding AI on top of that, where it's able to basically give you the answers you want on a programmatic level at a much faster rate, and it's happening instantaneously or it's scheduled. Like these use cases is really what a lot of companies are really driving into the ecosystem. You have ServiceNow basically doing it. Bill McDermott's talked about ad nauseum. ServiceNow is like literally, it's the king when it comes to integrations of workflows with CMDB. And they're already ahead of the game in that. Like when you guys were talking about software digestion, I get it. Like there's going to be some companies that are going to get consumed by it. But then there's some companies that are really going to stand to lead, especially with Atlassian, right? I would think that from a long-term perspective, I would think Atlassian team and also Workday as well are trading at pretty attractive valuations considering how much control they have in the enterprise. And being able to translate that and translate those AI features that they do have as far as capability goes to all their enterprise clients, I think that's going to become pretty important next few years.
I think the tricky thing about that space, though, is that software is being viewed as a commodity now in a new digital economy. Like you can't just be a layer You can't just be middleware. And I think that names that are catching bids in that space, you're clearly seeing their data infrastructure names. Like you're seeing Palantir, like I don't view them as software, but some people do. I really don't. Cloudflare, for example, people view them as software. I really don't. It's a very different elements of what they do. But you're seeing like the consumption models, like the database, like Oracle. Like Daniel was very early on Oracle. Like what was the dollar amount on Oracle when we started bullish on? It
I
was
was
like
really started banging the table in like 22 at $70.
Yeah.
It's
It was like
one of
a
the
few years ago.
richest enterprise data environments on the planet.
And he saw the revival in the OCI play. They're going to actually be a cloud player. I think there's going to be like companies like that where right now it doesn't look like this, but the way things are trending, they can actually pull a lever. And those companies are the ones that have so much data compliance associated with them. And we're talking like IBM, for example. IBM is not talked about enough about they have some levers they can really pull that nobody else can replicate, like through their mainframe, through Watson. They're like once quantum has that aha moment, nobody knows when. But if you look at IONQ stock price, you think it's happening right now because it's been on the tear. But like IBM is a very important quantum player that doesn't get credited enough. Combine that with their mainframe on Watson, like they might have an Oracle revival sometime down the line that they can pull. They have the leadership in place to do so. But like you have to think about it that way and stuff, like trying to find like who's going to be the biggest winner in the CRM space or DevOps. I think that's too risky. You're going to maybe miss the AI boat if you try to catch like, oh, the Monday.coms out there, or like this is undervalued, or Duolingo, for example. That's a polarizing one. Like it's too noisy. Why try to buy a noisy company when you're clearly seeing stage one of AI, the winners and pretenders, and these winners have years and years of runway that the team will just high tide resolve both. So I don't know. Sam, what do you think about Duolingo?
So I am bullish Duolingo, mostly because I think it's heavily mispriced and understood. So if you look at their most recent earnings, they look amazing, right? They're producing free cash flow. It's outpacing the revenue as well. But it's really all tied to sentiment as far as keeping the prices down. You saw the last earnings, it basically went from $330 all the way up to like 450. And then ChatGPT 5 came out. They came out with some sort of language translation, whatever, and the stock just plummeted like $100 in like a matter of a couple of hours. And then the AirPods came out with the feature that, hey, we're going to be able to give you live AI translation. And then Duolingo took a hit, and then it recovered. And then you saw Meta yesterday with their presentation as well, which I'm bullish Meta, but like that is not how I want a presentation to turn out with the Wi-Fi not working and stuff, which sucks. But anyways, you don't really see a pullback with Duolingo. I feel like the price has been so suppressed to a point where the sellers are getting exhausted. So this is just from a shorter term perspective. I mean, longer term, like obviously, they're going to be in danger unless they transition to something. But I do think that as far as a company goes, I don't think they're necessarily a language learning company. I think they're just a learning company, period. But they're utilizing software and a UI interface as well as their strategies for keeping the user in their economy to be able to continue to build that top line, build a clientele, DAUs, MAUs, and so on. That's my bullish case with Duolingo.
Well, okay, I'm going to stick my neck out here. Long term, I think they're very Gen AI vulnerable. I don't know if they're going to really ever get a premium valuation. And I'm saying this from anecdotal evidence I have in my own life. My fiance, you have no idea how many times it's 10 p.m. We're about to go to bed. She's like, oh, I have to go do my Duolingo. I don't want to lose my streak. And she just goes through it really quickly. They're perfect at monetizing guilt. And I think that's something that can't last long term. I really do believe that when you look at a company that's their entire product loop is designed around streaks, hearts, reminders, those guilt trick on maintaining your streaks, like it's like so much pressure to not break the chain. That psychology really only works in the short term, because eventually in a couple of years, I think people are going to realize, maybe even shorter, I'm not really fluent in this language or what I'm doing right now. Like I spent this much time as a active user, but I really don't know the language. And I think that guilt and consumption are not durable foundations for long-term value, especially when you have all these bigger players having replicate products that they can offer in their own suite of products for free. So I think once the engagement mechanics lose novelty. And I do think that once users realize they're not really fluent in a couple years after paying up hundreds of dollars for using this product, like it's going to somewhat become harder to retain those members. And it's going to be a business that's built on keeping people hooked rather than making them better. That proves to me that's always vulnerable, especially in the new digital economy. And I could be wrong. I have been very wrong in the past. Daniel knows I've been very wrong on SoFi. I've been very wrong on Hims and Her Health. I could be wrong, but Duolingo just to me screams, I don't think this is a Spotify versus Apple Music moment. I could be wrong. We'll see, but I'm not touching it. It's too noisy.
No, I don't think that it's going to be able to maintain its dominance, right? Like apps come and go, ideas come and go, and so on. I just think from a short-term perspective, Duolingo is very mispriced.
Well,
and
also, like the numbers don't back me up. Like I look like the schmuck right now because the numbers are
the numbers
fundamentals
are good.
are
Like I'm a very big numbers guy. The fundamentals attached to it, and the sentiment's terrible. Like that's like the perfect recipe for a quick turnaround in a trade, right? Like we all have some little trades that we do. That we have our long-term thesis companies and our core holdings. And is Duolingo a core holding for me? No, it's not a core holding, but I think it's asymmetric.
Listen, if Duolingo had a weightlifting component of teaching that I can look like Daniel, like maybe I'll be more incentivized to use it. Like, oh, this is how you can train using these bicep curls, these squats. I'm like, oh, interesting. I'm a trainer now.
Peptides. I got no opinion on that company, so it's not.
It's all good. It's all. But one thing I know you have an opinion on is Viking Therapeutics. So we saw what happened a couple weeks back, and the stock is currently, is it still in the 20s?
It's like 24.
Yeah, okay.
One of the best undervalued.
Yeah. So this is a pretty interesting one because I was talking to Shai a little bit about this too. Me, him, and Sock were talking about it, and I saw it up in like the 42s. It's getting a lot of momentum, and like it has not dropped below like 24 but $23 recently. So like, what's the story with Viking Therapeutics, and do you think that it's a really good, well, caveat, I already know you think it's a good buy, but like, what are your thoughts about that versus like Novo Nordisk and Eli Lilly and stuff?
Well, first of all, I mean, I think this was a perfect opportunity for the shorts to do their worst. And this happens in pharma all the time. So people that get into this particular business have to have a completely different appetite for investing. I've told my story before, with Chemocentrics was another company, an orphan drug, got FDA approved, went up, I shorted all the way back down, didn't do anything for months. And then I woke up one morning and it was bought by Amgen for like a 200% premium from the day before. This is a company that, has sort of played chicken with the market. They've got a really good balance sheet. They got a ton of cash. This is not one of those drug companies that have failed FDA, or needing to redo a phase 2 or anything like that would put them out of business. They have like $1 billion of cash in the books. But they are playing chicken with the idea of manufacturing going to market directly. I think a lot of investors want them to be bought out. But you're talking about a company that has an average, rating on the street of around $100 price target. The way they were treated for what was relatively good data was really, really badly. I mean, the fact that they had like 20% of people on placebo claimed to have issues when they did the drug. Like, so the actual gap and delta between the people who had reactions and the people who had reactions on placebo was actually quite low. And the weight loss was better than all the others. It was significantly better than all the others. And it did like in 13 weeks, it lost more weight than Lilly's pill drug did in like 70 weeks. So it was a massively better performing drug. But the bottom line is that, it didn't get bought. It wasn't clear. It didn't have no side effects. Back to the drawing board. They're going to do a phase 3. My bet is through phase 3 process, it'll rise. And there is a chance at some point, whether it's a Pfizer or whether it's a Lilly, the new news about Novo and their drug going to phase 3 and doing pretty well. All that to me just sets up that there's a ton of demand in the market. These big companies, they want a GLP. As a peptide guy that does injections regularly, a lot of people don't want to do injections. They don't want to deal with needles. They don't want to deal with all that stuff. If you could give someone the magic pill and it would make them thin, they'll take it. Viking's got the best magic pill. It's got the best probability. It's I'm not giving it financial advice, but it's a buy here. And I've been at it. I've been adding through options. And by the way, I made a fortune trading options ahead of that announcement. I made options selling puts. I made options selling calls. I'm good. I own a big stake in that company. I've added since the drop, and I'll keep playing that volatility. And I bet you in some point between now and 2027, that thing, I'm going to wake up one morning and it's going to sell for somewhere between 80 and $150 a share.
Yeah, I've been looking into that one as far as the options vet goes, because the premium is still pretty high in that one. And I mean, I think it's great that we're talking about this because we have Sacco part of the boys crew, and he does a lot of the short-term plays and options as well. And there's a lot of good setups in the market. I mean, one of them I would think is Duolingo, as far as the premium that it has in terms of the options. Like, they're pretty elevated up there. And I've spent a little bit of time just like selling put credit spreads in this thing because it just doesn't want to go down lower. So why not capture some premium? But yeah, there's some good opportunities there. Obviously for VKTX, I think the long-term perspective on this is pretty good. I'm looking at this thing and I need to do some more research digging on this one. Shai, what are your thoughts on VKTX, as well as any updated thoughts on HIMS?
I mean, I think VKTX is just temporary dislocation created by misinformation, like this Daniel called out, where it was just not apples to apples the way they were talking about it. And also discontinuation noise that was just way overdrawn on, again, not apples to apples. I think their manufacturing capabilities is heavily discounted on once their product actually gets past phase 3, that they can be ready like that. I think this market is not a blimp of a moment. I think this is a structural shift that's going to happen permanently. And I do believe that right now, when so many names are just catching bids, what hasn't? What's been penalized when what I believe is misinformation and misreaction? It's Viking. Like, Viking under 25 is kind of
a great thing about having a position, Shai, is it's another defensive. Like, this thing won't trade with the overall market. Like, it's going to trade based on the test, the phases, the tests, the approvals, and the potential buyouts. That's what's going to trade on. So what I'm saying is, like, if you're looking to have some things that are not directly tied to this kind of steaming hot run that we're on in the market, some of these pharma type names, they trade on their own sort of on their own schedule. What I would say, by the way, is like, this is one that could be very frustrating for investors. Like, if you're like parking money and you're watching IONQ ripping 65% a week, and you're watching Nebius go up 100% a week, and you're going to get so frustrated owning these. But like I said, I like to have a few plays that are kind of off the grid. So, and by the way, I'm super long HIMS, huge believer in HIMS. No TRT for me, but I'm waiting for them to announce the peptides.
Daniel's right though. Like, guys, like, the names that we've been pounding the table for like years, like, the market has rewarded us. They've had multiple expansions. They're like, Astera Labs is above 250. I don't even know what Broad comes at anymore. NVIDIA's up 70. Oracle's at a crazy, like, all these names, like, they're AI winners, and the market's pricing them accordingly. So, like, if you have capital, where are you going to put them? I'm not buying Cloudflare at 220. I'm not buying Palantir 170. Like, I'm
even
for alpha
125.
Robin at 120. Yeah, I didn't even know that. That's crazy to me. They're at 125. Like, there's the alpha to be made right now is
70.
That I actually wanted to bring up. Yeah, I actually wanted to bring up IONQ real quick because
really quickly before we do, I do want to say, like, just really quickly, is I've been playing a lot of options on your energy plays, all these energy. So Cypher and Iron, and I know you guys are all.
Iron's been a monster lately.
Absolutely. But the volatility is incredible. I was writing 15-10 put spreads and taking a huge premium 3 months from now.
I've been doing it at Iron all week.
The market clearly does not trust that these prices are sustainable. But at the same time, without my belief in the growth, I have a serious doubt that it's going to pull back by 50 or 75%. Having said that, Sam, I don't know about you, and I don't know about you, Shai, but I don't know if any of you really truly survived the fall of 2022. But I had stocks that went down 80%. I had the picture of the phone with margin call ringing you. I had margin call ringing me. Like, I was sending checks to cover positions. big time. I mean, big checks. So for all you out there that have not been through a drawdown like that, just know like this is euphoric. And I'm a holder. And, you and Shai, you and I talk about that. Like I exited my DraftKings position this year. I had about I had a pretty good stake. It was a 7-figure stake in DraftKings, and I exited. And that's one of the first times like I've exited a big position like entirely. And by the way, all of it went into Oscar. Almost all of it.
Nice.
At about $13. But the net of it is that like if you haven't been through that, there's two great lessons for the investors out here who are out here investing with the boys. But one lesson is these drawdowns are real and they can happen. And I think in this era of algorithmic trading and sort of massively fast moving news cycles, the drawdowns will be more violent and faster than ever before. The good news is the V shapes come quicker too. I mean, we've seen that with the last few, how quickly you kind of get to a bottom and start coming back. And then, of course, Sam, you can. But the other lesson is know what you own. And like when these drawdowns happen and great names get crushed, like I was pounding the table on Squawk Box on CNBC in 2022, debating with Andrew Ross Sorkin and Becky Quick about NVIDIA. It was a split adjusted $30 a share. And I basically said to them, like, you either believe in AI and its trend line or you do not. But if you believe in this trend line, NVIDIA is the name to own. At that time, NVIDIA was down like 70% from its high. And people were just saying it was the end. Microsoft was down 50%. And what I'm saying is like the smart people, I mean, some smart people know how to trim positions. Shai, you do this, you trim, you add, you take a little cash, you get position. Long-term investors, the sort of Charlie Munger, Warren Buffett's, they know what they own. And when things draw down, they don't exit. Like they rarely trim unless they're just done with the stuff. What they do is they add. They see these sell-offs and they add. And so like with SoFi, I bought it in the 20s, but it went down to $4, guys. It was down at $4 a share. And I accumulated between $4 and $10, a massive position in that company because I knew it was a good company. Good quarters, good fundamentals, good earnings, good growth. What else do you want? At some point, the markets are efficient over time. Sorry for my rant, but for all those people out here listening, since I don't get to be regular in this community, maybe just leaving a little tidbit of wisdom.
No, I mean, that's great, man. That's great. I mean, Shai's obviously been very public about the positions that he's built over time. I mean, Shai, you're buying, what's your average on Palantir?
My average, I think, is like $9 or $9.50. Top number one position.
Yeah,
so the way here, real quick on how I do it, which is whenever
I sold my position, I was in at $9.
Yeah.
So my strategy is when it's a high conviction overweight position and it becomes a multi-bagger, I take all my initial risk off and I let it ride the rest of the time. So Palantir, I have number one position. I sold my initial risk in the 70s. Guys, 70s. I was way early. I just haven't touched it since and it's grown into it. But yeah, that's just my style.
Yeah, who would have known? But yeah, no, there's more than a few things that, obviously it's having an amassed amount or a basket of investments is really what's going to help you build the true wealth over time. And a lot of the money is really made in the holding. I think there's like a lot of crazy moves happening in the market right now. People like you were saying with Nebius up like 40% in 1 week. People feeling the FOMO. It's like, oh, got to buy Nebius out. It's like, well, there's plenty of opportunity in the market around. The problem is that at the all-time highs where we are today, it's very difficult to find those. But obviously, there's value stocks that do have the perspective, but you're never going to make that like 10 times in a couple of years with a lot of these value stocks. But that being said, I wanted to get a little bit into IONQ. Quantum computing is going nuts. We had news with Rigetti today. The other day, Niccolo De Masi, CEO of IONQ, said that GPUs are going to be obsolete by 2027, and that's when quantum chips are going to start taking the lead. Now, I know you guys are big. Yeah.
Was that the actual quote? He said they're going to be obsolete. Like, I'm just asking because I didn't hear it, and I find, by the way, just for everyone out there, Niccolo is a personal friend of mine. He's an investor in my business, and I am an advisor to INQ. So everything I say, just know that going into this next. But like, I think he understands the power of AI plus quantum. I'd be surprised if that was the actual quote, Sam. And why I'm asking is because if it was, that deserves to be picked apart a little bit.
Well, I wanted to pick that up a little bit because obviously those are the headlines that are out there, right? You're going to have a lot of news media outlets spitting the headlines, just get the ratings, just get the clicks and everything. But some of the headlines, they say that IONQ CEO claims that their quantum chips will make classical GPUs like NVIDIA's Blackwell look outdated by 2027. That's it. And then people spun it around to say obsolete and stuff. But like, what is your take on that? Because obviously quantum is on a massive run lately. What people thought would not happen by 2040, per Jensen Huang, that he had said in a conference almost a year ago, is now appearing like it's going to be a lot sooner than that. Not just a decade ahead, but like almost 13 years ahead, according to Niccolo. So, like, what are your thoughts on that?
Yeah, I really need context because I was just at their investor day. I don't think he genuinely believes that quantum is going to replace traditional AI. What I do think is, I think he knows that quantum plus AI will be the most powerful combination. Quantum will make AI more efficient. Quantum will enhance the success of what results you get with AI through things like models. Quantum will be used to secure networks and blockchains and crypto. So there is no world in the future where quantum isn't going to be aligned to AI. I don't think there's a situation where quantum will replace it. I don't think anyone thinks quantum will replace it. Quantum basically requires classical computing in some ways to run the application layer. So it's like, I think that we have to be super careful how we articulate the role that quantum has to play. But between quantum compute, quantum sensing, and quantum networking, these things are increasingly becoming commercialized. And, there is real revenue, there is real business. I think networking and sensing is almost immediate. It's going to be very large. And I think computing, it's all about getting to that 1,000 type qubit threshold. I mean, we're at like a 36 qubit system right now. Not a ton you can do with it. It's really a research project right now. But like when you start to see the scale over the next couple of years, and the way IonQ told the story of connecting their basically their networking kind of acting and their acquisitions acting as the sort of Mellanox to their computing, which is their NVIDIA. It was a great story. It's super compelling. And clearly the market likes it because, Nicolo's like a superhero right now. That stock under their previous CEO, it never really went over like $20. Since Nicolo's been there, the thing's like tripled. And he's doing deals. He's acquired. He's winning deals with the Department of Energy in the UK.
Oh, that was crazy news yesterday.
Shay, you're a fan. I mean, you were in this before you met me.
Yeah, I mean, I won't get into too much. I know we're about to wrap up, but yeah, I mean, IonQ might be the only pure play quantum name out there that isn't just a hardware company. And I think that's really important because the hardware is very, very, very early, but don't undervalue the prime contractor component that IonQ is trying to solve right now. All their acquisitions past couple months proves that they are going after sovereignty demand on security. That is immediate revenue they can get today. Doesn't matter what the level of hardware it is. A lot of components in the quantum ecosystem, they can benefit from these prime contractor deals. Look at Rocket Lab, what they've done the past year or two, like following similar suit. And I think that's going to be a great gap fill. And that's why they're catching a bid that they're above like $70 right now, is because that's giving them the leeway until the hardware side catches up. And now when it does, because eventually it will, hardware is the next derivative of AI and tech, that they're going to have the networking and the prime contractor and the hardware all aligned at the same time. Quantum might be just as big an opportunity in AI eventually. Like it might be well, and there is no better stack right now than the one IonQ has. And they are a category leader, and would not be surprised that they get some kind of sovereignty deals on the Trump side eventually, because just like how AI was, this is a national security risk. If China solves quantum before the West does, detrimental. It doesn't matter how much ahead they are in AI, that's dangerous. So I think the EU, the US, if everyone in the NATO, they're going to do some kind of pacts to make sure that doesn't happen. And the best player in that whole space, category leader, is IonQ, and I can see a lot of flows going that way.
Yeah. Maybe I need to buy some stock.
I've been
Anyways,
saying it's the teens.
yeah, I know, but it's like you look at the chart, just like all wait for it to come back, and doesn't come back. It's like shoot. But anyways, not going to digress that any longer. We're coming to the top of the hour here for us on a recording. But again, Daniel, appreciate you joining us over here. Again, everyone, Daniel is the CEO and head of Futurum Group, and Shai, chief strategist, right? So chief strategist of Futurum Equities. We're going to be back.
He's the king alpha maker. He's the
There
king.
you go. There you go. What was it up like 300 and something percent in the past 3 years? Like just a little bit, right? But anyways, appreciate you guys tuning in next week. Oh, by the way, welcome back, Shai. I think this was the first episode you're back with us after Time to Not. There you go. There you go. All right. So let's get some demos in there.
Like that's new. You're wearing.
Told you in secret.
I got an engagement ring.
Yeah, and without a doubt, there's going to be so many more things to talk about next week. Again, appreciate you guys for tuning up with us. Take care.